This is the Chicks of FinTwit, a finance podcast by women for everyone. I am your host, Caitlin Cook. Join me as I highlight female trailblazers and their male allies across the industry as each shares their expertise on a variety of finance topics. Nothing is off limits. Thanks for joining us. Now please enjoy this episode.
All opinions expressed by Caitlin Cook and the Chicks of FinTwit podcast guests are solely their own opinions and do not reflect the opinions of the host or any of their affiliates. This podcast is for informational purposes only, is not investment advice, and should not be relied upon for any investment decisions. We are not recommending any securities, nor is this an offer or sale of a security.
Hello and welcome to the Chicks of FinTwit podcast, a finance podcast by women for everyone. I'm your host, Caitlin Cook, otherwise known as Dead Kate Bounce on Twitter. And today with us, we have Ann Barry, Chief Investment Officer and Managing Partner at Wheelhouse. Ann, welcome to the podcast.
Thank you so much for having me on. Thrilled to be here.
Thrilled to have you. Shout out to Katy Perry, a previous Chicks of FinTwit guest, for the connection here. But so much I want to ask you. First of all, I said this offline, but I looked at your LinkedIn, was doing some research before this, and you've just done so many things. I'm fascinated to talk about all of it. Maybe starting out, we'll talk a little bit about what Wheelhouse does as well, because that sounds very interesting. But where did you start and how did you get to where you're at? I always love hearing those stories.
It has been such a meandering journey, Kate, and you're going to have to sort of be a bit of a guide as I just throw out some of the chapters along the way. So I started life in England. I'm actually a born and raised native Londoner. And after I went to college, I went to Goldman Sachs in London, and I started out life as an M&A banker, mergers and acquisitions, and did the requisite, million hours a week as a young person right out of college, working on actually really interesting cross-border advisory work for huge multinational clients. And so I started off, I remember some very interesting projects I worked on fondly, including commuting to Chile at one point to try and sell a utility business. I worked on a huge take private of a company called Marks and Spencer, which was the sort of national darling in the UK. So I cut my teeth in finance, classically trained M&A banker. And then I moved across to do private equity investing, also at Goldman in London, came to the US to go to business school. So I spent 2 years doing that, and then graduated into the Great Recession in 2008, right as I was moving to New York and working at Goldman Sachs here in the US for the first time. And so that was an eye-opening experience. It wasn't at all what any of us expected, of course. And so I spent the first sort of 18 months in that role, effectively becoming a credit investor. Traditional private equity, which was buying and owning companies in a control way, had really slowed down, and we were looking at investing in debt for a while instead. And then when the markets came back, I went back to doing private equity control investing in the consumer sector, in the industrial space, in business services, and for a while in oil field services. And then at the beginning of 2017, I left to start a private equity firm with my old boss, a firm called Cornell Capital. I'm still a senior advisor there, doing trans-Pacific control and leverage buyout investments. It was super fun, great success. I had a year stint as a CEO of one of our portfolio companies. So I was living in Vegas through COVID, running that business. And then at the beginning of this year, I joined Wheelhouse here in New York, and I spend a lot of time in LA as well. So that's the nutshell version, but I feel as though I've lived many lives in all of that. So I'll go wherever you want on that one.
There's so many places to go. I think many lives is right. Well, I am curious. First of all, I'm always tempted to ask people about their experience through '08, right? A lot of people that I've talked to, they graduated and they started out in the industry at that time, kind of how it shaped where they went. You sort of went into that, right? Working in private equity, but kind of shifting the focus within that. I guess I really want to ask about Wheelhouse. So maybe we'll start there and kind of work our way backwards from all the things you've done. But from looking on even just the website and my quick research, it doesn't seem like a traditional VC shop, right? Like everything that was on the site, it talked about entertainment, it talked about media. So maybe let's just get into a little bit of what you're doing now with Wheelhouse.
The story of Wheelhouse is absolutely fascinating. And it's the uniqueness of the platform that is really the reason why I made a step from traditional Wall Street, where I'd grown up, into something which is extremely entrepreneurial and multidimensional and cross-disciplinary. So many different elements to the business. It's extraordinary. And the business was founded by a gentleman called Brent Montgomery, who is an extremely successful TV producer. He'd been making shows such as Pawn Stars, American Restoration, and others. And he rolled up the unscripted TV space, sold it to ITV, and became the CEO of ITV North America. And he founded Wheelhouse in 2018 and with Jimmy Kimmel as his partner, started an entertainment division. So started with what he knew, which was making TV content, and then really had this vision for having lots of different content production platforms, which ultimately could support an investment division where the portfolio companies in which we put capital had the ability to get access to great content creators and great content strategists because of the capabilities of the rest of the firm. So as well as TV productions, we make fantastic TV shows. We also make digital content through our DNA division. So working with digitally native superstars on YouTube, on Snap, and helping them accelerate their content production and the volume of it, and sometimes go cross-platform. We also have a fantastic creative marketing branding agency called Labs. And then we've got physical properties, which we call the houses in LA, New York, and Stanford. And what we'll do there, Caitlin, is we'll get this incredible mix of founders, entrepreneurs, business builders, content creators, production folks, Hollywood folks, and also investors. And you put them together in a place that's curated and have an event around them and stimulus to talk about interesting trends. And that's where the magic happens to find great investment opportunities. So I focus now on tech and consumer growth investing.
Well, that sounds like a lot of fun. And I see why you moved over there. Wow. So, and I think I do like having these conversations, right? Looking at, we look at traditional financial services. Obviously, that's the background that you come from, is like banking, the traditional background, and going into these more nuanced areas, right? You don't really think of entertainment when you think of finance, right? I think of banking functions like most people would. But maybe let's talk about the intersection of entertainment and finance. So I think that, that industry needs as much financing just as anywhere else, right? But I think it's a much more interesting kind of business to operate within, especially thinking even in the last year or two, right? With creator economy, and there's probably a lot of more exciting developments just outside of like traditional TV and in movies.
I would say the intersection of finance, but really it's commerce and business with entertainment and content, is encapsulated in those two words, the creator economy. And I think, Caitlin, I'm a little cautious using it. I think it's very quickly becoming an overused term. It's a little bit like artificial intelligence, right? There's actually very few subsets of things that are called machine learning or AI that are truly in that bucket. And I have the same cautionary tale with the creator economy. The way I think about it now is that everything consumer facing either has or needs to have a content strategy behind it. And the background to why I joined Wheelhouse and to what we're doing and why they all come together, I think, in a really compelling way, is that at the time I first got to know the team at Wheelhouse, I was investing in large food, personal care, beauty businesses and trying to figure out where in those spaces to put capital to work. And I was looking at the time at other parts in the supply chain, like in the manufacturing side of the house or the formula development side of the house, because there you were able to get the benefit of the good profitability that exists in those sectors without taking on the risk of trying to create a brand in a world where the barriers to entry are now very low, and brands have to fight extremely hard to get the attention of consumers. Whether it's when you, Caitlin, are walking through your local store and there are so many brands that have proliferated sitting on those shelves, or if you're scrolling through your Instagram with a ton of different brands that you haven't come across before being pushed out as promoted pieces of content onto your stream. So I got to know Wheelhouse because I wanted to find a partner that understood how to make content and tell brand stories in a way that really captured the consumer's attention, and try to find brands that I would then invest behind, put the two together, and then really help to accelerate those brands' growth trajectories. Now I'm at Wheelhouse doing it internally and putting the money to work internally. But I think this dynamic of creators who can bring large audiences to consumer-facing brands and convert them into consumers of the products of those brands are in a very strong position right now to be able to go drive value and to get compensated for that value. And so I think it's not just about finance for the brands themselves, Caitlin. I think it's about how the creators themselves are finding financing in really new and exciting ways, more than they have been able to in the past.
Yeah, lots of opportunities out there right now. And when this might be a bit of a broad question, but from your experience now working within that industry in the capacity that you are, and looking at the trends and looking at what's working and what's not, and what's been successful for businesses in this environment, how do you best capture a consumer? Because there's so much out there. There's more shiny objects being dangled in front of the faces of consumers more than ever now, thanks to social media and whatnot. So how do you truly engage your target audience these days? I know it has to be targeted. I'm sure it depends on, the industry that you're operating within, but I feel like that's probably one of the most difficult things for businesses these days, and is figuring out how to differentiate.
Well, I would start by saying that nothing can actually compensate for having poor product. So you can have the best content strategy or marketing strategy in the world, but if your product's not very good, it's very difficult to make up the ground that you lose by virtue of having something subpar. So I'd start by saying very strong products that are really solving a consumer problem and who understand what the brand identity is. Brands sometimes try and make the mistakes of trying to be all things to all people. It's really difficult to win that way, particularly when a brand is starting out. And so one of the things we try to do is work with brands that are somewhat younger in their life cycle, past proof of concept, they've already achieved some kind of scale, and are really trying to figure out how to go to the next level. And what we end up counseling many of these brands on is making sure they're extremely authentic in terms of which influencers or creators they choose to partner with. I think the consumer has become extremely suspicious of sort of paid endorsements, right? I'm sure, Caitlin, when you're scrolling through your social media and you see a talent or celebrity holding up some product that somehow you just know in your gut doesn't fit with that celebrity's passions or pursuits, you have a visceral reaction that's to reject what you feel is being pushed on you as sort of a false positioning. And so that authenticity, finding and collaborating with other creators and other brands, partnering with other brands to share audiences where there's a very authentic and natural part of the story that can be shared together is really core to it at its base. And then the question of going, virality is a completely different one, which can be a little bit more art than science, but I just threw a lot at you. So tell me what you think of all that.
I mean, it's such a tough question to tackle anyways, and you did that very well, but I kind of backing up to just like clarifying. So when I think of most VC firms and you describe what Wheelhouse does, what is the biggest differentiator between what Wheelhouse does and traditional counterparts? Because I know you mentioned, obviously the people who founded the firm had a background in entertainment. It's kind of funding those different projects and whatnot, and then also having an entertainment arm yourself. I just want to make sure that I have the story on that right before I ask more questions.
Sure. So Wheelhouse is unique because it brings together lots of different capabilities. When it comes to capital to support young growing companies, there is an abundance of capital right now, the likes of which haven't been seen in 15 years. There is so much money right now chasing particularly tech-oriented consumer-facing brands that businesses with good models who are able to create, frankly, some buzz around them when they're going out to raise capital have the pick of the number of venture capital firms or private equity firms or family offices or high net worth individuals and successful founders or sovereign wealth funds. Huge numbers of different kinds of players who can provide capital. What a lot of those more traditional capital providers don't have necessarily is a real operating engine that can get behind a company and behind a founder and actually deliver something specific and tangible. In our case, it's content. It's, if we were a manufacturing business, perhaps it would be offering some manufacturing capacity, but it's something really tangible and specific to the operations of the portfolio companies that we can offer in a way that standalone capital can't.
Sorry, I was muted. So with there being so much competition for deal flow, like when you and the firm are looking at different opportunities, is what in particular, what types of companies or what areas within the space that you're looking at are most advantageous right now for you?
Well, I can talk at a macro level about where we're seeing really interesting trends. And I think sort of taking that big step back is probably quite a useful way to look at it. We have seen a lot in connected fitness over the last couple of years, which makes sense because that is an innovative area when it comes to product. And then it's also where content has become such a core part of the fitness experience that this really plays to our strengths in understanding what kind of content resonates, what kind of brand ambassadors resonate. And so the marriage of those two things, a growing consumer trend as millennials and Gen Z become increasingly health focused, and they want to consume great content, video, audio while they're working out. So those two areas have been very much of interest to us. We're increasingly spending our time looking at disruptive fintech. So we're looking at different kinds of platforms that provide access to consumers, whether it's to invest in traditional assets, whether it's non-traditional assets. We spend a lot of time looking at the collectible space. That's another area that we enjoy. And then we also spend a lot of time looking at marketplaces. And to go to your opening question, Caitlin, on how financing or business and commerce and entertainment can come together, marketplaces have become real testing grounds and pilot grounds for ways in which to bring those things together. So if you think about it, there was a moment in time where everyone said traditional retail is dead, right? Everything's now direct to consumer, everything's e-commerce. Well, what's happened is it's become so expensive for D2C brands to try and acquire customers because it's so crowded out there on the web and in the digital space that it's now quite difficult to make money as a D2C or e-commerce platform only. And so omnichannel is really now the core for how at least profitable brands are able to try and scale. And so we spend a lot of our time looking at where experiential comes together with digital, whether that's in retail, whether that's in other forms of community-driven business models. So that intersection is a place we spend a lot of time spending our time.
Even just the technological innovations part of what you just said is so much to unpack. And I know you do quite a bit of media on your own. I, did the research and everything, saw your talk a lot with like AI, crypto, that sort of thing. I think there's so much to talk about there. Business aside, like aside from Wheelhouse, you personally, with what you find the most interesting outside of what you just mentioned, where do you see kind of the most interesting opportunities? Not necessarily from like a VC standpoint, but like maybe even just traditional consumer from different businesses to look into within tech.
Sure. So I do angel investing. I have done for a very long time. And first and foremost, I find that investing very early stages in angel, it tends to be so much more about a germ of an idea and then a founder you just really believe in. And so I've got certain themes I've looked at over the many years I've been doing this, but really it's been the power of a network and getting to know just great founders who, by the way, in turn tend to get to know other great founders and have other great entrepreneurs in their networks too. And it becomes a sort of self-fulfilling, really exciting constellation of compelling entrepreneurs to spend time with. One area that I, for quite a long time, have been looking at is this idea of esports. And esports now is by far the biggest sports category in the world. If you look at the number of folks who go to any of the major league games and you compare that with the number of esports fans, I mean, just it's dwarfed, and traditional is dwarfed in number. And so an early business I invested in myself is a business called Drone Racing League, which was founded by a classmate and great friend of mine, Nick Korbacheski. And he would, in the very early days of the business, go to really interesting locations, Brooklyn Navy Yards, or, I'm from London, the Battersea Power Station, which at the time was a sort of destitute but fascinating building. And he would literally set up assault courses for drones, very Star Wars-like. And these pilots would come up and race their drones through this assault course. And I remember this concept being presented to me. We're having brunch or something and discussing it. And you could just see the white space there, Caitlin, was huge, right? They could get ticketed events, creating revenue for them. There's merchandise that comes from that. I'm a big believer, as I said, in experiential. People want community of some form. And these events that bring people together seemed very compelling. But there's also sports betting, right? Then there's also the gaming element and the streaming. And the business has gone on to strike deals with ESPN and with Twitter and with NBC. And what I loved about that model, Caitlin, it was a combination of this very human desire to gather, to have an experience with this very cutting edge technological focus, which is, they've since moved into blockchain, and I can see that VR is going to be a key part of their future. And it was the bringing together of the old and the new. And I love models like that, because what you're really doing is providing something that's familiar enough that it's going to prompt adoption, but it's creative and cutting edge enough that it's really going to excite people and grow a market that perhaps didn't exist before. And I love that.
I love that too, right? You're pulling people into the future with what they know because they won't jump into it, right? So I love that. And small caveat, but I should introduce you to my friend Brenna, who is also a guest on the show, who loves drones, and Julia Carrion, who is also a good friend and will be a guest on the pod as well, who is very much into innovation and esports and has been like banging that drum for years. I just feel like you'd get along well. But in more to the conversation we were having, I think that it's really interesting to see like the developments there. And it's sort of funny how we're going back to, I'd be curious in your thoughts on all of the talk on metaverse and whatnot. Yeah. Because like you said, we need that experiential aspect. We want to be around people. I'm curious, sort of not directly in relation to what you were just talking about. When we look at all of the news with like the metaverse and the different opportunities, quote unquote, that there are for people to connect in person as close as you can be, but like not actually being with each other. What are your thoughts on how that will unfold compared to something like you said, that's like experiential with the new technology, but still actually in one central location together? Maybe a weird question, but.
Oh, no, I love this question. And the weirder, the better. No, I love this question because I think it really gets to the heart of how VR has evolved and whether this is this moment in time where I keep saying, I think virtual reality's come of age. And whether it's called the metaverse, which basically the word itself doesn't mean anything necessarily. It doesn't. And, there was this big brouhaha about Facebook changing its name, and a rose by any other name smells as sweet. And are they trying to, is a name change a distraction? I don't think it is. And just caveat, I own Facebook stock personally in a small way. And when the announcement came out, I actually thought, no, there has been a lot leading up to this moment technologically. And this is the moment where adoption becomes the key focus. The key issue that VR has had for a long time has been the lack of very high quality content to really incite people to sort of adopt it outside sort of niche gaming audiences. But there have been a couple of, Caitlin, of really interesting industries that I think have been driving a willingness to adopt VR in ways that you wouldn't necessarily think of as the glamorous cutting edge technology path to getting out there into the mass market. So I'll give you some examples. I became obsessed with this idea that VR was about to come of age. And I thought that 5G and the fact that mobile would be able to support the hugely data consuming needs of having VR or AR on a mobile device, I thought that 5G and this broadband investment would be the catalyst that would get adoption to speed up, because it would be so much more accessible on mobile. And as I dug into this, I started to read about companies that were focusing on developing VR software for training programs in the workplace. And I dug into this more, and I found in the medical profession, surgeons are being trained using VR. So before they get into to do surgery on a person, they're training using VR simulations outside of the operating theatre. Wow. Walmart's another example. Walmart has trained, and this was before COVID, over 1 million store associates using Facebook brands with Oculus, etc., headsets. So a store associate would turn up, and if you wanted to be trained to train your store associate on how to deal with an angry customer, you'd have VR simulations during the onboarding process. Or how do you pick up something safely to put it on a shelf? The training can happen in a way that doesn't put your body at risk, and therefore put workers' comp, which is a big cost for retailers, at risk by having a VR simulation. So the fact that people have been trained, or in other cases treated medically using VR or AR therapies, to me, that's a really exciting trend to look at, because sometimes you need to bring people along in the workplace before you can necessarily get there in the home place, if that makes sense.
It does. And I'm sorry, my mind is a little bit blown. I knew nothing about like the medical applications or anything like that, but that makes so much sense, right? I think it's a lot of being able to test things out and have people be trained without bringing them to a central location to have to do it, which costs more. There's a lot of different that you mentioned, like the potential for like workers' comp, I think you said too, or all of that. So, I mean, that's crazy. Is that where you see the biggest opportunity within VR and AR? Is that where you see it being applied at a broader scale to like all different types of businesses with like trainings and whatnot? Or do you see bigger opportunities elsewhere?
I think the ultimate end goal for the players in this space is for it being VR and AR to be consumed everywhere, to be this kind of, as widely available as mobile telephony is. I think the end game would be for VR and AR to have the same kind of omnipresence. But I think in the journey along the way, I do think some of the biggest investment in content is probably going to be in some of these other industries, and to get real innovation dollars and research and development dollars behind treatments for Alzheimer's is another place, for example. If Walmart puts its mind to pretty much anything, if it decides it wants best in the world content with which to train store associates, it's going to put its dollars behind it. If Amazon decides it wants to take some of its massive R&D budget to use VR, AR to train distribution center workers, for example, I think that the innovation and the investment in it coming from non-consumer facing industries can actually be a really important part in the near term to get great content and great capabilities and great hardware. But I think the end game is to have mass access in the home, on mobile, in schools, anywhere that you've got consumers. I can see this being the place that this goes.
Wow. I'm going to be thinking about this tonight.
Terrifying in a way, but
it is. That was going to be my next question, right? I think with all of this great technology, it's a double-edged sword with everything, right? So there's definitely downsides to this. So I was going to ask if you could outline some of the biggest kind of pitfalls of, adopting all of this and having it be widespread eventually, which I think is where it's going as well.
Well, it's a tricky question, and it's one where I think there's a lot that has been learned over the course of the last year, particularly when it comes to social media, and a lot of the focus that there is on understanding what the impact on consuming social media in large quantities has, particularly on young people. By young people, I don't say that in a patronizing way, but I mean a really digitally native generation. When I'm not a digitally native generation, Caitlin, I'm the elder millennial demographic. So I have adopted technology along the way, but I look at young people now, and I'll give you a specific example. As you said, Katy Perry, who's been on your podcast, she works at this fantastic fintech business called Public, where I host shows. And I was so excited to find out that I was going to be involved in speaking on that financial literacy program on there. And I remember I was on vacation at the time that I'd learned that this was going to happen. And I was with the 3 kids and some very dear friends of mine. And the kids are 11, 8, and 4. And I said to the 8-year-old, I'm really excited. I'm going to do some talking on something called Public. And the 8-year-old said, oh, I know what Public is. And I said, no, you don't. She said, no, I do. It trades stocks and shares and stuff, right? And I said, well, how do you know that? She said, oh, my favorite TikTok influencer was talking about it on her TikTok feed. So here's an 8-year-old who had awareness of a brand in the stock trading fintech space because a TikTok star under the age of 18 had talked about it, right? So when I think about the exposure that young people have to social media and the extent to which they can really absorb and retain what they're learning on these platforms, there's tremendous opportunity. It's super positive for the art, I think, of the possible in education and access to great education. But the flip side of that is, how do you protect these young people at very vulnerable and formative times in their life there are negative consequences, whether it's learning to consume or be educated using more traditional platforms which are important for creativity versus all on screen time. How do we factor that in? And that's a long way of saying I think VR and AR is actually going to exacerbate those issues because it's so much more immersive and so much more, frankly, distracting as a result and overstimulating. And I think we need to do a lot more to understand young formative psychologies and educational and learning patterns to try and make sure that a lot of this technology is adopted in a way that's ultimately healthy and useful.
It's hard to find a balance, I'd imagine, and especially with the way that you're talking about how VR could be kind of integrated with it everyday life in a lot of different ways. It's hard to pull away from that, right? I think it's what you kind of go all in on these things once you've taken the time to have them integrated in and learn them and whatnot. So how do we even, not expecting to have like the full answers to the world or anything, but when this comes about, and I think we know a lot of people, me personally too, with like the over attachment to social media, just everything online, constantly staring at a screen, there are consequences to that. But how do you pull back as like a society to realize that that might not be the best way? Because you still want to take advantage of that, all of the innovation, right? But there's a reason that some things were done the way they were back in the day, like even 10 years ago, and why we should probably continue some of that as well.
It's a really great question. And I really wish I had better and more thorough solutions to it. I do think one area that would be useful is to have more collaboration between research institutes, whether there is in universities, whether they are government affiliated, working with some of these big tech innovators, so that there's a sharing and an understanding of what some of the repercussions are, so that guardrails or solutions can be developed in parallel with the tech itself being created. If you think about what's happened with social media, which I think net has been a very powerful and important tool and a great equalizer of access to information and a great amplifier of voices that simply would never have had a chance to be heard in the past. So I think there have been huge benefits. If you now look at all the regulatory conversation or the privacy conversation or the is there a negative impact on the teenage demographic conversation, all of this, at least to me, feels very much like it's long after the train left the station, right? And it's very backward looking, it's very retroactive. And it feels as though there's a momentum gathering to try and sort of fix the sins of the past. I think the great learning from that, Caitlin, would be to say, okay, the same bodies, the same organizations and institutions that are today saying there are issues with social media and what they have done needs to stop and say, okay, well, what's the next wave of innovation? And then how do we partner with these tech companies to make sure that we, the concerned, keep pace with where that innovation is going? I think that dialogue hasn't started yet. I think there's lots of blaming. I don't think there's enough learning that's actually happening that's forward looking right now.
I would agree. And I think that there's also like a misalignment of incentives too, because I don't know if it's between like profit and being more responsible. We've seen time and time again of like companies in the past and case studies of firms that have taken advantage of, not necessarily doing things that are most responsible, but for the bottom line of like trying to bring in more money. I'd be curious, not even necessarily a question for you, just thinking, but it'd just be, I don't know how we get those incentives more aligned, what's better for society and what's better for profit for these individual companies. But I do think that that's an issue that comes up quite a bit, would just be like of greed, honestly, and competition. And some of the companies that would like be more willing to open up the floodgates and be less conservative, potentially outpacing the ones that are more conservative, although it's might be more responsible for like the end user themselves. But do you think that those companies get weeded out in the long run? Or do you think that that's something that persists and, like you said, just kind of like extrapolates the issues that we've been like pushing down for a while now?
It's so hard to tell in this day and age, because when I was listening to you, Caitlin, describe businesses that have since become known for putting profit above the interest of anything else. The one that sprang to mind for me was the tobacco industry, right? And the big tobacco companies. And I think about that now, and I'm thinking on the spot, the repercussions and the consequences of smoking cigarettes and tobacco were visible, measurable, diagnosable for quite a long time. And I think what's complicated now when it comes to technology and what the impact on the consumer is, I think we're not yet at a point where it's extremely hard right now to diagnose and see and have visibility into what the consequences are at the moment in time in which we're consuming it. I mean, there's a lot of conversation and dialogue now around mental health, for example, and that's got nothing to do in a vacuum with technology. I think there's a much more open dialogue around many elements of mental health. But for many people who have had chapters or wrestled with mental health challenges, a lot of that challenge was internal facing for a lot of people. It's a very lonely experience for them. And I wonder, when we talk about things, whether it's social media or it's the impact of technological consumption, are all of the things that you would look out for necessarily visible? Do we know what to look for yet? And I just don't think we have the answer to that right now. And that's why having that open dialogue that is truly multidisciplinary, where the scientific and the medical community and the mental wellness community and the tech community with different lenses and different areas of domain expertise can come together and have a conversation. I think that's a really important part to try and self-regulate a little bit going forward.
I agreed. No, that's great. And I kind of want to flip the switch here onto something else. And I know I was told you I was going to ask about as well. So with all of the different kind of happenings within financial services, crypto being one I wanted to ask you about, but another that I've heard you talk about quite a bit is SPACs. I know that's easy to go down the rabbit hole on, but curious, I know this is probably a broad question as well, but just like your thoughts on that and why you believe that there is a lot of promise in what SPACs could offer, despite, I feel like there's a lot of mixed commentary on SPACs, but for those who don't know quite as much, why do you see the potential in those?
Yeah, the conversation around SPACs at the moment sort of go in and out of fashion depending on what the market's doing. So SPACs has, as a category, as an asset class, had a real sort of couple of windows of moments in the sun over the last sort of 2 years. And very simply put, what the SPACs are, they are entities that are set up by typically industry experts, and they'll go out and raise some capital as a public entity, and capital goes into that public entity, and then the folks managing that SPAC with their domain expertise will look to go and buy a company in an industry in which they are expert, and through the acquisition of that company, that target company is now a publicly traded company because it's been merged into the public entity. And we can talk about the incentive structures, and there are lots of different ways in which it's financed and all the rest of it, but sort of simply put, when SPACs were the favored topics of financial news, which is at sort of the beginning of this year, end of last year, is because a lot of those companies being acquired by these SPAC entities were these incredibly sort of glamorous, innovative businesses, which had been sitting in the private markets and which many of us had heard about because they became household names, but there'd never been a way to access an opportunity to invest in them. So if you think about Virgin Galactic, so space, or if you think about 23andMe, genetic coding, these are the kinds of businesses where we'd all heard about them and they have great sizzle. And in some cases, they've actually got very good business models. Suddenly there was a way to get some equity participation in them. And that was by buying shares through these SPAC entities. So I think when they are successful, and I will define successful as sustaining a decent price increase and the value of these businesses that have been acquired through the SPACs go up, they do provide access to retail investors, to interesting businesses that perhaps wouldn't otherwise have come to be available to be invested in on quite the same timeline, where ideally the SPAC leadership, being domain experts, have done great due diligence. They really understand the space. And so, the retail investor has the benefit of real experts who've really picked a winner when they went and decided to make that acquisition. So when done well, I think that they're a very interesting vehicle. Now, they compete with IPOs, right? They compete with direct listings. There are other ways that these businesses could come to market. And then you ask yourself the question, well, if they could do a traditional IPO, why didn't they do it, right? Is there something going on? So it's a more complicated story. But where SPACs, I think, have suffered is there's just so many of them, which means that we've got a dynamic now where there's a lot of capital chasing after these deals. That being said, the exact same is true in the private market where these deals would exist otherwise. And you said this, Caitlin, earlier, there's so much money out there right now. What differentiates one from the other? So the same is true whether these companies are in a public SPAC target list or whether they are existing in the private market. And I think the other piece of this is too that not all SPACs are created equal. There are some folks who've been doing SPACs for a long time. They really are domain experts. They know a certain industry very well. There are other SPACs that have come to market because the window was open. There was a halo around the asset class, and there was just a lot of money that was going in this direction. And some people were able to get their vehicles out there. It remains to be seen if they can actually find a company to buy at a valuation that makes sense. So I wouldn't write SPACs off. They can provide optionality for retail investors. A SPAC can have, call it 2 years. They'll yield treasury rates to the retail investor while a company is being sought for that SPAC to buy. So it's a good option in some cases. But right now, a lot of them are really struggling. Not always their fault, but I do think at some point there is a valuable exercise to be done, which is to go through everything that came to market through a SPAC and really do a deep dive fundamental analysis and find out which ones are being punished right now unfairly just because the whole SPAC asset class has suffered, versus which ones actually deserve to be looked at on a standalone fundamental basis because they're good businesses.
So I guess backing up, when you talk about like the SPAC boom sort of that we saw more recently, where everyone was talking about SPACs, they were everywhere on Twitter. Again, social media addiction coming out here. But so SPACs were around before this year. I mean, I feel like they've been around for quite a while. So why are they just coming to the forefront as a good opportunity? What shifted? Is it just the companies that were associated with these SPACs? Like, is that the reason that they all of a sudden like showed up in the limelight, or was there another reason?
Yeah, SPACs have been around for 20 years at least. But I think what happened over the last 2 years, the stock market has been just on such a bull run. It's just been such a powerful stock market with so much wealth to some who've been very lucky and so much liquidity created that they sort of had their moment in time, which wasn't necessarily the case before without a market that was quite as strong. I think at the same time, there are a couple of landmark deals that were done, again, real big household names that were going public via SPAC, which just set in motion all of the momentum. So it's not a surprise given the strength of the market we saw starting from the beginning of last year. But then I don't think the day is not done. They'll come back again. I really do think that.
You heard it here first. Had to have that in audio. So they will be back. It's kind of along the lines of another hot topic of the year. I'm biased from working within the space, but I did warn you of this. Just talking about crypto too. You talk about technological innovations. You've talked about kind of the other areas that you're interested in. I've seen you talk a bit about crypto, but I'm curious for more specifics on your outlook there and what you think of it from the perspective you're coming from, where it's, you're very bullish on technological innovations. You think that, I feel like you're very future oriented on like the way the puck is going and skating that way, which I love. And we need more people like that are forward thinking. But what are your thoughts on crypto? Probably a tough question, but lots to cover in that space.
Tough question, and one that I'm always cautious in unpacking because I still think there's a lot that is unknown about the space. I think there are a lot of incredibly smart people who are all in on crypto. They're real crypto evangelists. And then you've got a couple of cynics. I think people tend to be bucketed in as sort of believers or non-believers. And that's why I'm also a bit cautious, because I'm somewhere in the middle. I'm I'm very excited about blockchain technology broadly and digital contracts and the applications of these. So I would say that if crypto has been the catalyst to have a conversation around what is possible with blockchain broadly, then I think that has been, a purpose well served. Where I am cautious, though, Caitlin, on crypto is there are now so many different kinds of tokens and coins. And I think the word currency has been misused, actually. I think it's been appropriated and misused in some cases. A lot of these crypto tokens are not mediums of exchange. They're not store of value in the sense that there is a fundamental inherent underpinning to the price at which they are trading. And so they're not a store of value because some of them have just become purely speculative. I was talking about Shiba Inu recently publicly, and I was interviewing someone actually who was very bullish on Shiba Inu and was talking about the fact that it was cheap at the time. And I had to interject and say, cheap is a relative concept. Cheap suggests that there is a fundamental value to this asset and its price today is less than that value, and that would make it cheap. If it has no innate value, it's not cheap. Actually, in fact, it could be very expensive if it's got a value greater or price greater than zero today. And so what I worry about, Caitlin, is that there are the equivalent, there are crypto memes. Doge was one of them, others that are getting a lot of momentum behind them. because there is a social media frenzy, or there is a community that really amps up the buzz around it. And where I worry is if you get folks who look at these as lottery tickets, and for folks who start piling their money into these to make a quick buck, when they don't necessarily have some other staples, an emergency cash reserve, for example. That's where I get very nervous. And I'll give you a specific example just to frame it, but please interject if I'm going off topic. I spent a lot of last year running a business in Las Vegas that had been very hard hit. It was in the hospitality space. And this business had a long-standing affiliation with a wonderful charitable organization in Nevada that sought to give scholarships to young people whose families hadn't gone to college. And it was really a chance to get them through school. And I was asked to talk to this inspiring group of young people about how to think about networking in their careers. So I sat and I did a Zoom, not unlike this one, and there was some back and forth and some Q&A that was career related. And at the end, one of the students on the program said, when I invited them to ask questions, said, I've got a question for you. You know, I've downloaded this trading app. Which crypto should I buy? And I said, well, tell me first how much you've got in your savings account, and tell me first how your family are doing, because Nevada's got 30% unemployment right now, and tell me how you're doing in, you know, paying for school. And then we can go and talk about, you know, perhaps whether to take a bit of a, to allocate some of your savings. That's where I worry, Caitlin. So I think, long way of saying, the same statements could be made about being on the stock market, right? That people sort of piling in there. But I just think that the conversation around crypto needs a bit more education, I think. And I'm not sure that education is happening quite yet.
Absolutely preach to all of that. And I know I told you before with like building out a platform for crypto education, even just for like financial advisors, there's so much misinformation out there. Yeah. And it's frustrating, right? Because even like I'm with you on the potential of blockchain technology. I think that could be implemented in so many different ways when you think about record keeping, supply chain, everything. And people don't talk about that enough. What people are talking about is again, that shiny dangly object, but there's not really, again, like an underlying investment thesis behind it. It's speculative, which is fine, but you need to understand that that's the place that it takes. It's not an investment. It's not something you should be trying to get rich quick on. And I agree with you that that's the biggest thing that concerns me is, yes, it's gotten a lot of people interested in what they think is investing, but I don't think that they have the things set up in their life that they should. Do they have a financial plan? Do they have savings? Do they have everything else completely buttoned up in a way that they should before they start putting any of their assets into something like this? And again, I also don't think that cryptocurrency is a good way to describe almost any of it. I would say just personally, Bitcoin as a cryptocurrency, the rest is crypto assets. Crypto assets I use for like the whole ecosystem because I think that's a better umbrella than putting it under currencies. Like that's just not, it's a misnomer. Like that's not what the actual function of it is, or hopefully will never be for a lot of them, like a Doge or a Shiba, or it's just very interesting to see the frenzy around it. And I think when that dies down, and curious for your take on this as well. I mean, I like to think it's a net positive for like going in the right direction, but I think that there's going to be some destructive components to it as well.
It's interesting that when a lot of folks I speak to, and like I say, there are a lot of very smart folks, people who've really made enormous amounts of money in this space. And I salute them for being forward thinking and seeing an opportunity. And one of the recurring themes I keep hearing when I talk to people who are much better educated on this, frankly, than I am, they say, well, it's now reached the point where there's a sense of inevitability about cryptocurrency. You know, in the same way that Uber reached this tipping point where so many people had adopted it that, you know, regulators and cities or municipalities who didn't like Uber suddenly realized they kind of had to get with the program. People are now, I think, beginning to talk about crypto, or they have been for a while, in those sorts of terms. And I think it was Jamie Dimon who, I forget which news program he said this on, but he basically said, look, I don't believe in crypto at all. I think it's all just, you know, worthless. But our clients are asking for the ability to, you know, use it through the JP Morgan platform. So we'll provide it because, you know, they're sophisticated, they understand what we're doing, and we're going to respond to the demand. But, Jamie Dimon, is not a believer in this. And so I think to your point, Caitlin, I think this comes back to what I said at the beginning. I think crypto has become very much those who believe and those who don't. And I think that can cause that kind of tension, can be very exciting in some ways, because that's what makes the market, it's what drives innovation in some cases. But I do think that it can create challenges around things like regulation, because it's very hard to have a balanced, unbiased conversation about what perhaps appropriate protections could be if it's a sort of them versus us dialogue. If you've got the non-believer saying this is complete nonsense, it doesn't have any value, any sort of regulatory or protective measures they propose are going to be seen, right, as an attempt to squash it by those who are the real sort of evangelists for it. So I think there needs to be a little bit less extremism in the dialogue for it to become widely adopted in ways that are ultimately productive, if that's the way to go, including, by the way, government issued digital currencies, which no one really talks about. Where if you look
that's
at Europe,
coming next.
I think it's I agree with you. I think it's absolutely coming next. And that's coming next. And I think to what you alluded to, I think digital contracts and real estate are coming. I think that's very exciting. I would love for the dialogue to start moving towards that versus what we have right now, which is almost, anarchist versus other.
It's just not as sexy to be talking about supply chain applications and real estate contracts, and but it can all be documented here and it's immutable and and no one cares about that part, right? They care about, again, like that quick buck, which I think that's like the biggest danger, is having that. But like you said, I think a government issued stable coin. And I think that's the reason that there's been so much regulatory talk around stable coins in particular, so that the regulatory agencies have a bit more of a control over like the centralized banks that can issue their own and kind of reel in this giant beast that's entirely decentralized and kind of the opposite of all of that. That's just me. But yeah, I think there's a lot to unpack there. I think a lot of it's just like human psychology. It's like fascinating to see the mania around, people jumping on board. I will say I was probably like 2 years old in the .com bubble. So I can't remember, but I imagine, people like to think this is the first time that this behavior has ever happened. I think social media has made it more pronounced, but it's definitely not the first time that there's been a mania like this. So hopefully it dies down. I think that's kind of like the cycle of it. Eventually it will, but I don't know when that is.
If it is a mania, right? Because embedded in that is the assumption that it is, we don't know yet. The truth is we don't know yet. But I think the extension I'm seeing of a similar dynamic is if you think about NFTs, non-fungible tokens. And this is top of my mind because I was at this fantastic event yesterday that was hosted by Dapper Labs here in New York. And it was this immersive experience. I walked into this spectacular event space, and there were NFTs being projected on these fantastic walls. And it really brought to life in a very compelling, experiential way. That's what I loved about it. Again, it was experiential in the sense that there was a gathering of a community of people, and it was the display was very much, art-like in terms of the environment and in terms of the presentation of some, top shot NFTs on there. It was very cool. Now, some of these NFTs are being traded for astronomical amounts of money. Is that mania? Don't know, right? We'll look back 10 years from now and perhaps the prices have gone up so far. You and I will be sitting here going, why do we use the word mania on that podcast? Why do we do that?
So, Anne, the last question that I always ask all of my guests, while you're not busy just like kicking ass and doing really cool things with AR, VC, so many acronyms, what do you do in your free time? Like, what do you do for fun?
Oh my gosh. Well, I am lucky that I have the most fantastic dynamic group of friends. I try and spend a lot of time with my friends and family. I play tennis, which is something that I have just completely immersed myself in over the course of the last year, which I love. I'm a big art fan. I read a lot, love to read, and real books, by the way, actual physical copies where you can turn the pages and you can smell the print and all that kind of stuff. And, as you mentioned earlier, I do quite a lot of media commentary. I'm on live TV a lot, talking about what's going on in tech and consumer. And that is in my free time. That isn't something that I peg as my day job. It's something I just really love to do. And it's all part of this passion, Caitlin, for financial literacy. I do want more women feeling comfortable talking about all things financial, knowing there are people working in these spaces. And so I just, part of the education process is something I am extremely passionate about. And then, of course, now that hopefully we're able to travel a lot more easily, I have a failed travel blogging chapter in my past. So I don't tend to write about it in quite the same way anymore, but I do love to get out there and explore. So I'm excited to start resuming that as soon as possible.
Oh man, I need to book some flights. I have travel fever, but I guess 2 follow-up questions to that just for people listening, but travel recommendations and book recommendations. Again, not audiobooks. I listen to Audibles when I'm doing like work and things just to kind of multitask, but I get it. Having the actual physical book is just a different thing entirely. So what are your top recommendations?
Yeah, and I retain storylines. I retain stuff that I've read where I've actually physically touched the paper much better than if I read online. So 2 novels I've absolutely loved. One is The Interestings by Meg Wolitzer. Really interesting coming of age novel, a great observation on a sort of study on how friends interact and how the dynamics can change. The most powerful book I've read in the last couple of months is The Sympathizer, which was about the fall of Saigon and Vietnam. And I read that, Caitlin, right as the situation in Afghanistan was unfolding. And so it was an incredibly powerful, the novel itself is incredibly powerful. It won the Pulitzer Prize, but to read it in the context of what's going on today in what has been a theater of war for the United States was just an overwhelming experience. So I really recommend that book, particularly at this moment in time. And then in terms of travel, I am a native Brit. I grew up in London. So I'd be remiss if I didn't make an aggressive plug for folks to go and visit the mother country. I'm excited to head back there for the holiday season. And it's, there's no place like home, but also for those who love to travel, I think London and the UK are very exciting places right now. There's a lot of cool stuff going on.
All right. Well, that's where my next trip will be. I'll hit you up on Twitter here.
Yes.
Travel recommendations.
Yes.
Well, this has been so much fun. Is first of all, great to meet you. This is incredible. And thank you so much for the time. Thank you to everyone for listening. But for the last question I have, actually, I did have one more, is where can everyone find you to follow all of your appearances, thought leadership, travel recommendations in the future?
So all of the shenanigans can be found on Twitter or on Instagram, and it's the same handle for both. It's at Annberry, ANNBERRY_NYC.
Perfect. Well, thank you so much again. And thank you to everyone for listening. And we'll be back next week with another episode.
Thank you, Caitlin. Thanks for having me.